What's going on, everyone? Today, the big man, Jerome Powell, said we have officially avoided a recession and expect another very good year. The market then proceeded to fall 3% in the biggest FOMC drop since March of 2020, and the Dow is on its first 10-day losing streak since 1974. 96% of the S&P 500 closed down in the red today. We have so much to talk about, and this recent price action is going to make for a crazy end to the year because it's during these times when some of the biggest opportunities get presented, whether it be in a short-term basis, playing puts, or even in like a longer-term basis, buying some of these dips that are forming. Either way, we have a lot to talk about today, and you will not want to miss out on this video, so make sure to stick with us all the way until the end.
Yesterday, we said today was probably going to be the biggest day until the end of the year, and I think that we definitely were right, Mike, and not the biggest day in a positive way either. As we can tell by the heat map, this is one of the bloodiest heat maps that we've seen in a while. Tesla down 8%, Amazon 4%. All the big tech stocks are pretty much down like 3% plus. So we're seeing some terrible, terrible price action in the short term. But this does bring increased volatility. But everybody's like, hey, so what really happened today, right? Didn't the FOMC, didn't the Federal Reserve cut rates like they were supposed to? Isn't everything kind of going according to plan? And it is. But at the same time, in the future, they are actually looking at fewer rate cuts than previously projected. And that's something that the market does not like. The market has been pricing in more rate cuts than that. So now the market has to adjust to this, and it's causing a little bit of short-term downtrend here, obviously. And Powell did not put on his mask and cape today.
Exactly. So, going deeper on that, like you said, Tom, Jerome Powell did cut rates today by 0.25%. And, like you said, that is what everyone was expecting. But the problem really comes into play about what's going to happen in the future. Basically, 14 of the 19 Fed officials penciled in only 2 quarter-point cuts in 2025, and maybe even less than that. So to simplify everything, the market was just expecting more rate cuts in the future than what's actually set to happen. At the same time, when you do have higher inflationary projections going forward, that's not a great sign. And when you couple that with the fact that the market has just been ripping in such a crazy way for, months now, it's only natural to have some element of profit taking, and when that profit taking gets more intense than just profit taking and turns into like panic selling like we saw today, it completely changes the dynamic. One thing that I thought was super interesting is that when we go to the CME rate tool, we can see that going forward, the market is only pricing in one more rate cut.
Yeah, that's very interesting here this year, or actually next year, I should say, right? But obviously at the next meeting in January, they're looking at a 93% chance of a pause, and these percentages could change over the next couple days, but they're only looking for one cut in June of next year. I know as of yesterday, we were actually supposed to see 2 cuts, one in March and then one later in the year, somewhere around September, I believe, but now we're only seeing one in June. So we'll see how the market digests this data, and I'm sure that as we get towards June and some of these later dates, these numbers will definitely change, but it is striking to see that in the short term and the market starting to walk back some of those previous projections. And to me, that's really what really fueled the selling here today. And Mike, everybody's worried about it. And, a lot of these stocks have been pulling back in the short term as well. Like NVIDIA and a few other of the tech stocks have been pretty weak in the couple of weeks leading up to this. So if we do start to see supports continue to give out even more, there's like that snowball effect starting to form. And today, we obviously saw that snowball effect with the panic selling.
Yeah, and Tom, don't even look at the VIX. If you want to talk about some panic, that is a great display of that. For those of you who don't know, VIX basically represents how scared people are in the market because it's tied to options pricing. The technical definition can be explained for hours, but the main thing you need to know, the more VIX goes up, the crazier the market gets and the more volatile it gets. We could see that today. I can't even believe I'm saying this. It popped up by 73% in a day. When you zoom out on VIX, you will see that most of the time it just does nothing and chops around, but every now and then it goes crazy and just skyrockets. We could see, looking at this recent price action, it's certainly getting to that like skyrocket mode, which isn't a good thing for the market. What everyone's thinking about right now is what's going to happen next. And while that's the multi-billion-dollar question, there are some key things to keep in mind. The first thing is that when we look at some recent price action with SPY, or quite frankly, any other major stocks right now, you could see that there is a lot of bearishness. The quicker and more consistent the market falls, the more that fear spreads throughout the market, the more profit taking that happens, and the more, margin calls and just fear that just happens. So basically, while we see the price action that we are currently seeing, it just makes the market even worse. At the same time, a certain degree of volatility and dips are not only expected, but are healthy for the market. Check out this data here that basically shows that volatility is just a natural part of the market. What we can see right here is that on any given year, on average, there are 7.3% dips, 3.4 5% dips, about 10% dip per year, and so on for 15 and 20%. Understand that these are total dips, like total drawdowns, but the main point still applies. If you're someone who's just been riding the Tesla or Palantir or Nvidia bull train up for the past year, one, congratulations, you probably made a bunch of money, but two, understand that some dips are inevitable and just a normal part of the market.
Yeah, they definitely are. And I think traders are definitely kind of stuck right now in the uptrend. At least a lot of them are. So hopefully you guys, take this to heart and definitely listen to this, because there could be some changes now, especially with what the Federal Reserve is doing and everything like that. And Mike, I know like the S5TH, the data here is very interesting with how many stocks in the S&P 500 are above their 200-day moving average. And this has been pretty flat here in the short term as the SPY has been making new highs. But now, as of the past couple days, we're starting to test these recent lows, and I don't know, we start to see this dip down pretty bad sometimes when the market starts pulling back, and sometimes we see the sell-off start to accelerate. And I think that the main thing is just watching these big tech stocks at these major supports like Apple, Microsoft, and others, because they're going to be testing some big ones here coming up in the short term, like we've been seeing with Nvidia.
You know it. And then let's also not forget about some of these crazy inverse ETFs as well. Like if you look at ETFs like UVXY or SQQQ, these things go crazy when the market's in panic mode, as we could see by their performance today. SQQQ popped up by just under 11%, and UVXY was up by 32%. So that was pretty crazy. But either way, keep them close on watch going forward. But another thing that is certainly worth keeping in mind is that, while we did see a rate cut, today, and while the market certainly did not react in a good way, there have been multiple other times in the past where the Fed has cut rates near all-time highs, and at least historically speaking, it has been pretty good and bullish most of the time. We could see by looking at the historical data, the market does tend to increase, but of course, it takes some time.
Yeah, exactly. And a dip like this today could just be a short-term downtrend. And then later this year, we could see a pretty good rip start to come in, right? The funny thing is that the 1-month return, Mike, is actually negative. So in the short term, we might actually see a bit of a downtrend there, maybe like what we're seeing today. But of course, as we get later, like 3 months, 6 months, 12 months, the numbers start to get pretty staggering to the upside. So that is something to keep in mind. This could just be a short-term dip with the market. And Mike, whenever I think of like a short-term dip in the market, I think everybody in the short term is asking this question. So I wanted to ask you this tonight. Is now the time to buy the dip, right? Everybody's like, hey, Tesla just fell today. Google fell. Everything's low. Is now the time to buy at the dip? Personally, I think things are a little bit too high right now, but I was curious on your thoughts with this.
Yeah, so of course, that's the multi-billion-dollar question, and while statistically speaking, the best thing to do is just a dollar cost average in over time, I personally think you can get a better deal if you wait. When you look at overall market conditions, valuations, this recent price action, and everything else, I don't really see the need to urgently rush in right now. I think you can get a better deal if you wait, and I'm very, very excited for the end of this year because the market's already moving in a crazy way. And as traders, we love when the market goes up, but there's also a ton of opportunity presented when the market falls, and the opportunities are like a lot crazier too. So either way, I'm super excited. Let's continue to adapt and flow with the market as it moves. But Tom, you already know everyone is waiting for those SPY levels. What's on the radar?
Oh my gosh, SPY tanked down so much today that we have to actually go back pretty far on like an hourly to daily chart to find some of these big support levels coming up. And I wanted to highlight the largest one here in the short term where SPY actually started to bounce up today. So there's been a couple good dips recently in movement, very close to 584 to 585. And today it got pretty low, just under there around 583 to 582. There's a big range right there, and I'm mainly watching this as support here for tomorrow. If we start to give out below this range and SPY breaks below 580, I think there could be a pretty big sell-off towards the downside. Today's move was so exponential that we really wiped out like almost months worth of SPY price action, right? So we're going to have to watch these supports I listed carefully, 584, 585, as well as watching for some resistances. The first one is coming up is right around 590 that I'm watching. That's going to be a more major level, as well as 594 to 595 if the SPY can start to come back. With these weird volatile days like this with FOMC events, sometimes we wake up the next day and SPY might try to mount a recovery. So we'll have to see what happens, but I don't know that that's going to play out that way this time.
Yeah, and I think it also says a lot how SPY is pretty decently far below that crucial $600 support level because, that was a key level and it slid right through that. And Tom, if you just pause where you're at on the chart right now, this is a perfect demonstration of the stock market taking the stairs up and the elevator down. and it's true though, because the market like inches higher and then like everyone just panics all at once. And, while that's just a reality, the key thing is just to adapt to it. Going forward, the market will be more volatile. The market will be crazier and we will see bigger moves. You could either make this an opportunity or you could have this work against you. The way to make it an opportunity is to adapt with the trend changes as they happen. During times of higher volatility, we see bigger moves in both directions. So don't try and fight that. Have stop losses. I cannot stress this enough right now. If you're going to pick one time to actually respect stop losses, now is the time. We are going to see strong moves and you want to make it so if for whatever reason the market is moving strongly in the direction you don't want it to, you can keep that loss limited. But if it moves in the direction you do want it to, then things can get really exciting. But either way, keep that in mind. But Tom, while today was certainly the biggest event, not only of the week, but of the rest of the year, what is on the lineup for tomorrow in terms of economic events and earnings?
Yeah, with economic data tomorrow, we do have the GDP growth rate coming out tomorrow. And then on Friday, we do have PCE data, which is going to be pretty big. That's actually the Federal Reserve's preferred inflation gauge there. So we'll be getting that coming out this week right after this big FOMC event. But with the earnings for tomorrow, we do have quite a few big ones tomorrow in after hours. Nike, FedEx, and BlackBerry reporting there in after hours. I would say Nike and FedEx are the main two that I'm going to be watching for. There are a couple in pre-market as well, but nothing that is overly popular. And then Friday, we do have Carnival Cruise Lines reporting as well, but that's pretty much it for the week. I think that we can mainly focus off the price action from today.
All right, sounds good. Well, let's get right to some setups and predictions then. The first stock that I'm watching is ticker symbol CVNA, Carvana. It had a brutal day today, and it broke below a key area of support around that $233 to $235 area. This is a weak look, and the stock has been kind of just like chopping around over the past couple of weeks, and it's pretty overextended in the grand scheme of things. At the same time, it's still pretty far away from its all-time high of like $380 a share that it made back in August of 2021. So either way, I really like the reward to risk playing this one to the downside. The short-term momentum's brutal as it fell by 8% on the day. The overall market sentiment is to the bear side, and it's definitely on the bearish watch going forward.
Gosh, this does look brutal, Mike. If that support gives out even more tomorrow, this will be a very, very fun play in the short term. So I'll definitely be watching for this one. With my first setup, I'm looking at SPXS to the upside. I think there could be some fun opportunities with this one in the short term as SPY starts to move to the downside a little bit more. It was up 8.9% today. And I guess that, we could honestly just throw any of these inverse ETFs in here like UVXY or SPXS or even SQQQ. I know we talked about them a little bit earlier, but I really do like the potential here on SPXS, especially to fill this gap back to the upside to about 660 and maybe even test $7 over the next couple days.
Beautiful. All right, another stock that is close on watch is APP. This stock has been one of the best performing stocks of the year, and it is certainly overextended, and it is in the process of reversing. I know we talked about this one a little bit yesterday, and it had a great move to the downside today, which is awesome. It broke that $320 support area, and the next major level is at 300. So either way, APP is still on my bearish radar. The market itself is weak. The stock's pulling back, and it has some pretty decently strong bearish momentum as well, which is always good to see.
Yeah, 300 will definitely be on watch here. That's a fun one in the short term. I will watch that one as well. There's a lot of good pullback opportunities here. And Mike, for all of the pattern traders out there, it's almost like a head and shoulders pattern starting to form on APP. So I'll definitely watch some of these resistances as well. But with my next setup, I'm looking at AMD to the downside again. I talked about this one yesterday, and we had a pretty defined level listed right around 123 with this stock. And today, as the Powell event started playing out, it ended up breaking under there in a pretty good way towards the end of the day. And we had a 120 target, and that almost hit at the end of the day. So there was a really good opportunity down here. If we see more bearish momentum tomorrow below 120 and we see a break below 119.90, I will keep watching AMD to the downside, especially with that end of day move today and support breaking. I think there could be a more significant move here.
Advanced Money Destroyer is still doing its thing. There we go. Alrighty. Well, besides that, Tom, we are all clear for today's momentum plays. And with the first one, we have MSTR to the downside.
Poor MicroStrategy today. So they're sitting right around $338 to $340, and we had to look at this one on the Bookmap because this is actually a major support on this stock where it posted its recent low. So if we go to the Bookmap here, there was a pretty big stack around 340 today and even 338 at the end of day. So if we start to see a bigger break down below 340 come tomorrow, I will keep watching MicroStrategy to the downside. Just understand that we need to break the recent low. And I would say, I know I just said 340 because that's the more major level. Today, it actually got towards 338. So we want to see 338 have the official break.
Sounds good. All right, with the next one, we have SoFi also to the downside.
SOFI, pretty bad drop in the short term here. If they end up breaking down under $14.85, keep watching them down as well.
All right, and now with the last one, we have Meta also to the downside.
Poor Meta, they're actually falling under $600 again. If they break under the low of day here, right around $593, keep watching them down.
All right, so we have Meta, SoFi, and MSTR all on watch for potential moves to the downside tomorrow if and only if they break through the levels listed. Basically, the stronger and more consistent these stocks move, the better the setups become. These stocks are volatile, so you have to be more than happy to flow and adjust with the trend changes as they happen. The worst thing any trader can do is not have a stop loss. So especially with these trades, because they move a lot, make sure to have stop losses and also respect them because they don't do any good if they're just, just forgotten about. But either way, keep these stocks close on the radar for tomorrow. They are definitely moving in a pretty big way. But besides that, we are all clear for today's $820,000 big money trade. And we are looking at none other than ticker symbol VT and at the 110 strike put options for February 21st of 2025. This is a bold trade here, Tom, and it's certainly interesting and a little bit scary at the same time. Basically, this is a high risk, high reward play that would profit quite a bit in the event of a further sell off. Given that the strike price is at $110 and that the current price is around like 118 to 119, there has to be like a decent sized move for this stock to hit 110. VT follows like the world stock market index, so basically if we see a full blown sell off, this play will do good. I will say that this is more of like a hedge play where, given its high risk, high reward, if you wanted to protect yourself a bit from like a broader market sell off, this play has the opportunity to do that. Again, it's high risk, high reward. It has a good chance of expiring worthless, but if it does end up expiring in the money, it'll go pretty crazy.
Yeah, and I would think in the short term here, there's definitely more potential with this one. It goes out to February, so there's a little bit of time to it, but I would still say fairly short term. But obviously, with something like this, we need a good downtrend to continue, and this might be a good time for one, right? We're seeing a lot of stocks overextended, as well as a lot of the bigger tech stocks like Nvidia and others having extended weakness in the short term. And if some of these pullbacks keep accelerating, of course, this will do pretty dang well in the short term. So I'm definitely going to watch VT down, Mike. It's not the biggest big money play ever, being 820,000, and I am watching the 117 support coming up for a potential break over the next couple of days. A breakdown there would give us a pretty clear shot towards 110. There's not too many supports mixed in before there.
Yeah, so either way, keep this one close on the radar going forward. But before we continue on, we have to give a giant shout out to today's member of the day, GDog23 in the Stocked Up Discord. They had a great post today showing some awesome profits with some QQQ puts where they made 800%, Tom. That's pretty crazy. About $1,700 as well. So huge shout out to you, GDog. Great work today, and hopefully these puts keep printing for you. If you guys are into short-term trading, definitely check out that first link in the description in the comments down below. Our surge bot went off today. As we can see, today's recap was, I would say, probably one of the most explosive ones that we've seen in a while. We had some Riot put options called out that popped up by 828%. Hood puts that called out that got popped up by 630%. Amazon puts for 332%. AVGO puts for 309%, and so on. Of course, there were some call plays as well that did not pop as much. Either way, if you're into short-term trading, you get full access to our army of trading robots. You could chat with Tom and myself all day long, access the big money plays on the same day they're called out, and best of all, you can join our weekly live events, which is actually tonight, and you get full access to all of our past live events recordings as well. Either way, if you're into short-term trading, it's the place to be. We are set for a crazy explosive end to the year, as we can tell just by looking at some of this recent price action. So there's going to be a lot of opportunities in many different ways. Mentally prepare yourself, trade in a smart way, protect yourself by having stop losses, follow the money, and get ready for a crazy end to the year. If you guys are new to the Stocked Up YouTube channel, consider obliterating that subscribe button to get our videos recommended to you more often. It takes us hours to make these videos, and we cover the most important news, information, setups, big money plays, and everything you have to know in usually 20 to 25 minutes or less. But I am super excited for the end of this year. Again, if you guys are into short-term trading, check out that first link in the description in the comments down below. But besides that, let's crush it in the market tomorrow.